Hey everyone, and welcome back to another episode of Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving into one of the most essential and often overlooked areas of investing: agricultural commodities. We're talking grains, livestock, dairy, and more. But don't worry, we're not just doing a drive-by, we're going deep. We'll break down what drives commodity prices, how you can trade them, and we'll zero in on corn, one of the most important agricultural assets out there. So, if you've ever wondered how to invest in commodities for beginners or what it really means to trade futures and options, stick around. By the end of this episode, you'll have a solid foundation in soft commodities trading, especially as we head into 2025 and beyond. Let's start with the basics. What are agricultural commodities? Well, they're farmed or raised products: wheat, soybeans, coffee, cattle, and yes, corn. These are traded on global exchanges in standardized contracts. If you're already familiar with hard commodities like gold and oil, think of agri-commodities as the softer, perishable cousins, affected more by weather, cycles, and seasons. They're foundational to human survival. We eat them, we feed them to livestock, and in many cases, we turn them into energy products like ethanol. Agricultural commodities aren't just something traders care about. They're tracked closely by governments, institutions, and consumers alike. Why? Because they directly affect food security, inflation, and trade balances. Now let's dig into today's spotlight commodity: corn. Corn is one of the most traded soft commodities on the planet. It's a staple food, a livestock feed, and a core ingredient in ethanol production. In the US alone, over 90 million acres of land are planted with corn each year. And because of that, its price movements can have a ripple effect across the global economy. Let's walk through the 6 major forces that drive corn prices. Number 1, climate and seasonality. Corn is planted in the spring and harvested in the fall, mostly in the US. Midwest. Bad weather? It can be catastrophic. Droughts, floods, late frosts, they all hurt yields. The USDA releases monthly crop progress and WASDE reports that give investors insight into how crops are doing. These reports? Huge catalysts for price moves. And with climate change disrupting growing cycles, we're seeing more volatility than ever before. Think about late springs, earlier than expected frosts, or sudden heat waves. All of these shake up markets. Number 2, supply and demand dynamics. Countries like China, Mexico, and the US consume vast amounts of corn. Demand spikes often correlate with livestock growth and economic expansion. And don't forget ethanol. When energy policies push biofuel use, corn demand shoots up. Also, meat consumption plays a big role. More cattle and poultry means more feed demand, which means more corn. Number 3, geopolitical risk and trade policy. Remember the US-China trade war? That hit corn exports hard. Tariffs, export bans, or shipping disruptions can crash prices by cutting demand or increasing domestic surplus. Number 4, currency movements. Corn's priced in US dollars. So when the dollar's strong, corn gets more expensive for foreign buyers. That typically slows exports. When the dollar weakens, exports jump. Number 5, speculation and fund flows. Corn isn't just for farmers. Hedge funds and institutional players trade corn futures. Big bets from speculators can create short-term volatility. These contracts are also used for hedging positions in related commodities like soybeans or wheat. And number 6, technology and genetics. Genetically modified seeds and precision agriculture tech can help farmers boost yields, even under stress. But too much production? That can tank prices. So while tech brings efficiency, it also introduces risks of oversupply. So how do you actually trade agricultural commodities like corn? Let's break down your options. First up, futures contracts. These are standardized agreements to buy or sell corn at a future date and a specific price. They're the backbone of agri-commodity trading. Corn futures trade on the Chicago Board of Trade, CBOT, and are among the most liquid in the world. Pros? You get direct exposure to price movements. Exchanges are well regulated and transparent. Leverage can supercharge your returns. Cons. Margin requirements can amplify losses. The complexity can overwhelm beginners. But here's the good news. If you want a place to start, check out crystalballmarkets.com. Their platform is made for beginner-friendly trading with simple margin tools. Perfect if you want to start small but think big. Option 2. Commodity ETFs and mutual funds. ETFs let you invest in corn without touching futures directly. Examples include the Teucrium Corn Fund, ticker symbol corn, and the Invesco DB Agriculture Fund for broader exposure. It's a good middle ground. Lower risk, no margin calls, but also no wild swings or windfalls. Option 3, agribusiness stocks. Buy into companies that depend on agriculture. Think Archer Daniels Midland, ADM, Bunge Limited, BG, Deere Company, DE, which makes farm equipment. If you're weighing buying gold or stocks, which is better, this is that same kind of thinking. Stocks are less volatile, but they're slower moving. Still, if you want exposure to the sector with dividend income potential, AG stocks are solid picks. Option 4, options on futures. These contracts give you the right, but not the obligation, to buy or sell futures. They're great for limiting your risk, since your max loss is what you pay in premium. Options offer serious strategic tools, like spreads or straddles, but you'll need to understand both the futures and the option sides. If that sounds complicated, don't worry. The Crystal Ball Markets podcast has you covered. It's one of the best commodity trading podcasts out there for beginners. They cover real strategies and use plain language. Let's get real for a minute. Commodity investing explained simple is this. You're not trying to predict exact prices. You're reacting to real-world data, understanding market cycles, and managing your exposure smartly. Here are the risks. Weather swings, government intervention, high volatility from leverage, spoilage if you're dealing with physical assets, and the rewards, low correlation with traditional markets, protection against inflation, big potential returns, especially with futures and options. Corn isn't like gold. When people ask gold versus stocks investing, they're comparing a fear hedge versus growth. Corn is different. It's tied directly to global consumption, food, feed, fuel. And because of that, seasonal and policy-based timing can make or break your strategy. All right, now let's look ahead. Alternative investments 2025, what's hot? Agricultural commodities are on that list. Why? Food security is a growing concern. Emerging markets are eating more meat, which means more corn demand. Biofuel use is rising, adding another layer to demand. If you're building a modern portfolio, you can't ignore commodities anymore. And if you want more coverage on alt assets, including agricultural commodities and even REIT investing podcast episodes, definitely check out the latest at crystalballmarkets.com. Their insights are actionable and beginner-friendly. To wrap it all up, agricultural commodities aren't just another asset class. They're fundamental to life. They react to weather, politics, technology, and consumer behavior. That makes them dynamic, and yeah, a little wild sometimes. But that also means opportunity. Corn is a great place to start. You can trade it via futures, ETFs, AG stocks, or options. The key is to understand the drivers and match the method to your risk tolerance and goals. So if you're ready to try it for yourself, go visit crystalballmarkets.com and set up your trading account. And if you want weekly insights, trading tips, and interviews with seasoned pros, don't forget to subscribe to the Crystal Ball Markets podcast. It's a must-listen commodity trading podcast. Thanks for tuning in to Financial Market Insights for Traders. I'm Sophia, and I'll catch you in the next episode.